Should you buy Ethereum? Today I'm going to help you answer that question by giving you a rundown in Ethereum 101 for the things that I think matter that should help you in making the right decision for you on whether or not you should invest into Ethereum or not. Because this asset in particular is all over the news, it's all over the mainstream media, and that's not a coincidence, which you'll find out in this video. So let's not waste any time. Let's jump in. We're going to start with the price chart because I'm sure that's what brought you here. And so this is Ethereum's price chart viewed from an all-time perspective. And so if you're new to crypto, it works in cycles. And so these massive swings in price that you're going to see have been from previous cycles. So Ethereum, this is the third cycle where it's been a part of, and they usually operate in 4-year durations. So if you track this back, you're going to see this was about 4 years ago, and this was about 4 years ago. So if you were to assume that the cycle habit will continue, we are at like this point-ish right now in the equivalent of right here, right? Because you're going to see how it ran up relative to the next cycle as more and more money comes into play, as more and more people adopt this technology. So first of all, I want to answer a few questions. Why is the price going up right now? Well, there's a few things. First of all, it benefits from being the second largest crypto in the world. The legislation changing is also helping it tremendously, and we're going to explain a lot of these different things throughout this video. And it also has some people who are good at telling stories, telling the story of Ethereum, which is critical for any asset to reach mainstream adoption. It has to be echoed by people that speak the language of those that have the money. Until the real people who have money are believing in something, the chances of it failing are still pretty high, because the real money, smart money, the big money, it doesn't lose. So once they start playing the game, they rig it a lot more, they manipulate it a lot more, but it doesn't really lose. It doesn't go away completely, because if people stop playing, then they can't take your money. So Ethereum has reached that point. It's at a pretty mainstream adoption. And so let's get to ChatGPT, explain what is Ethereum and how does it work. Explain it to me like I am brand new to crypto, because I'm sure many of you probably are if you're watching this video. So let's see what ChatGPT says, and I'll try to fill in the gaps and the things that they're missing and what really matters for helping you make your right decision. So what Ethereum is. Think of Ethereum like a global computer that anyone can use. Instead of running on one company's servers like Google or Amazon, it runs on thousands of computers all over the world at the same time. It has its own money called Ether, which people use to pay for things on this computer. So it's essentially a massive network, let's say, and it's split across a bunch of different people providing the necessary computing power and storage and what allows the network to function from a bunch of different places, meaning it's a lot more secure because it's not in one centralized place. The reason why big tech is so scary is because one entity controls way too much power, like way too much power in terms of access to data, privacy concerns, all those different things. So in theory, a decentralized global computer or global internet is what Ethereum is in theory offering. The ability to do a lot of things that we have become very accustomed to, that we know and love with the internet experience, and taking it to a next level of solving a lot of the current day problems that the regular internet has by providing more of a decentralized, dispersed access or dispersed infrastructure that allows that to take place. So let's go through these steps and then I'll fill in the gaps. So how it works. Blockchain backbone. Ethereum is built on a blockchain. A blockchain is like a digital notebook that records everything: transactions, programs, agreements. Once something is written in this notebook, it can't be erased or changed. So everything is irrefutable. It's proof. You can see that this happened. It takes place because it's kept track in the ledger that's on the blockchain. Smart contracts. So this is really what separates, say, Ethereum from something like Bitcoin, is the fact that this is built to have things built on it. And that's primarily done through the vehicle of a smart contract. So, I'm sure you heard of NFTs, which we'll dive deeper into later. Really what blew up NFTs, or Ethereum rather, last bull run, was the fact that all the major NFTs, for the most part, were done with Ethereum through a smart contract. So a smart contract allowed the NFT technology to really take place, because a smart contract can create the NFT, because the NFT is just digital scarcity. So it's saying that this thing exists. So the smart contract is both the creation of the NFT, creating that digital scarcity, and then also the tracking of who owns that, and depending on whose hands it's in or what platform it's on, et cetera, et cetera. That's all possible through a smart contract. And so these technologies are going to evolve dramatically, and the use case of a penguin picture is not going to be its final use case, obviously, but it is one of the first ones that reached mainstream adoption, because buying and selling NFTs were just objectively fun, and it also gave people the opportunity to have more of a digital flex, right? A lot of people who say NFTs are stupid, so are most expensive things on the planet. They just are. And so while it's a gimmick now, gimmicks don't go away. Rich people like flexing how much richness they have or how much money they have. Clearly, I'm not rich because I don't talk like them, but they like that shit. They love to flex their wealth, and a lot of people are going to come into money for the first time, and they're going to care more about these things than a lot of the other assets that traditional rich people have liked before, for the same reasons why those people liked it, right? The people that they were around and looked up to said that buying a Rolex was the right thing to do to exude status, right? That same thing's going to happen here. So that's what NFTs were. We'll dive deeper into that in a second. I don't want to distract you too much here. So a smart contract is like a vending machine. You put money into Ethereum, the rules are already coded inside, and it automatically gives you what you paid for. There's no middleman. So it allows things to take place without, say, a trusted third party like a bank may need, right? Or any sort of governing body. Example, instead of needing a lawyer for a simple agreement, you and I could use a smart contract that enforces the rules by itself. And this is really why Ethereum is blowing up in such a big way, is that the things that Ethereum can do are undeniably needed in the world. Our financial system is so outdated, and all of these things have been so obviously needed. But why it took so long for crypto to become mainstream is because these big money moves very slowly for the most part, because the rules have to get in place for them to still play the same game once this becomes the mainstream. So although we were told that crypto and Bitcoin and say Ethereum was all bullshit, it was all a scam, that's not by accident. The same people that were saying that it was a scam are going to be the people telling you to buy it now, because the rules are in place for them to benefit from you buying it and you using the system and the infrastructure. Nothing has changed in terms of what the plan was, in terms of what they're doing. Of course, the technology has progressed, but it could have progressed way faster if they weren't suppressing it and keeping it down. So that's the reality of the situation. Think about this, right? Like the NFT is the basic use case, but a smart contract is also going to be how homeownership is governed, how a lot of the major things that dictate our entire financial lives, they're better done through a blockchain. And Ethereum is one of the competitors, the largest competitor in the space, trying to provide that option to people and become the known and trusted, what's called a layer one blockchain. So just think about things that can be built on it. It's kind of the internet for crypto. That's why they call it Web3. It's the new modernized version of the internet. And there's so many things going in the way of these kinds of things being needed. And since Ethereum is the legacy incumbent, meaning it's the biggest one that was here for the longest amount of time, naturally it's getting a lot of the press because more people are involved, which I'll explain further. Smart contracts, very, very big deal. They're going to be way more in your face, whether you're even aware that you're entering a smart contract in the coming decade or so, you won't even really know, but that's how massive financial situations will be dictated. So decentralized applications. So developers build apps on Ethereum, like games, financial apps, social media, etc. So that's really what separates, say, Ethereum from Bitcoin, is the ability to easily build things on it that benefit the whole ecosystem. And so that's a lot of why NFTs blew up so much, is because it was one of the first fun ways of involving people in their crypto. And so as we progress, as more and more things get built, there's just gonna be more and more adoption. And so naturally, if it becomes, whenever layer one becomes the most used, and there will be a bunch of different winners, there won't be just one, there will be a few, but the more a platform like Ethereum wins, is by having more and more people using it, because everything on it just becomes more valuable the more people that are there, right? Like let's say with NFTs, the more people that come on and love Ethereum, the better story there is to tell for why the expensive NFTs are worth what they're worth. It's legacy technology. It says a lot. It means a lot. The story there is significant. And so naturally people want it because of that. So dApps are a very big thing. You're going to hear that word a lot if you're starting to invest in crypto or learn about crypto. Just think decentralized applications. Think of like your phone, how there's applications on your phone. We love the whole app experience. Well, with Ethereum and other layer one blockchains, you can build decentralized applications. So taking advantage of the blockchain technology and taking those benefits and bring it into experiences, like consumer experiences. And more is being built on all of these layer ones. But again, since ETH had the first to move advantage, it's got a pretty big network. And we'll break down how many developers on there, how many dApps there are, et cetera, all that good stuff. These apps run on the blockchain, so they aren't owned by one company. They're shared and run by the Ethereum network. So gas fees is another huge one. So why does Ethereum have value? A lot of people have been trying to explain the value of Ethereum to other people as saying it's like digital oil. And what you'll notice is that with any sort of product, and financial products aren't immune to this, is that it doesn't reach mainstream adoption until it's told in a way that the masses can understand, or at least in a way that the people who are making the decisions for everyone can understand. Because they have to be able to tell the story to the next person. And so if the story is not easy to tell, it doesn't spread. If you confuse people, you lose people. And so now there's finally enough people in this space that have the legal backing and the ability to pursue it, and they're good enough storytellers to really make this spread. And so there's a really good storyteller that is telling the story of Ethereum that we'll get onto a little later in this video. So to use Ethereum, to do any of the things on the blockchain that we've talked about, whether it be using a decentralized application, playing a game, buying or selling an NFT, creating an NFT, you have to use Ethereum or Ether, which is the actual asset itself, for gas. So the analogy of saying it is digital oil to a degree can make some sense, because you do have to burn gas or pay gas fees to facilitate a transaction on the network. So it actually makes it take place. You pay a little bit of fee for allowing that to take place. And so the more that the network grows, the more value there is for having the resource of gas, right? Let's use the example of oil. Why is oil so valuable? It's because everything uses oil. If you're thinking about it, literally oil runs the entire world currently for our current system, giving the people who control the oil a ton of money and a ton of power, which is why if Ethereum does become the gold standard, holding it is very, very powerful, whether that be for institutions or governments. It's a very big deal. So this is like paying for electricity when you use a computer. It keeps the system running and rewards the people, miners and validators, who maintain the network. So I'm not going to dive too deep into the technical terms for your investment decisions. I don't think that's where I can help you the most. You can look into these on your own if you want. But basically, the whole thing we talked about before, which was decentralization, how it's split amongst a bunch of different people, the miners and validators are helping to allow that to take place and allowing the whole system to be healthy and functional and all that good stuff. So any word that I'm going to go through this in any of these videos, if you don't understand the word that I'm saying, pause the video, go into ChatGPT and ask for a quick summary as to what that word means. It's going to give you context, and you can learn this stuff so fast, and it's going to give you a massive advantage. So let's go into the why people care section. There's no middleman. You can send money or make agreements without a bank or a lawyer. Open apps. Anyone can build or use apps without permission. Ownership. You truly own your digital items like NFTs, tokens, etc. That's very true, right? You can't come in and even physically steal it unless you know the access code. So it's a very big deal for ownership. Digital ownership is a better means of ownership for a lot of different things, and that's why they always say everything's coming on chain. That's because it makes more sense. It's more secure. It can't burn. It can't get lost in like a flood or whatever it may be. Global access works anywhere in the world with internet. That's pretty well everywhere, especially some of the crypto companies are out there actually solving the global internet problem through decentralized technology of getting internet everywhere. So the whole world, even the third world, will soon be connected and have access to the global economy through decentralized internet. So in short, Ethereum is a shared world computer with money and games. It's like the App Store, but instead of Apple controlling it, everyone runs it together. That's a fairly decent explanation of what Ethereum is, like Ethereum 101. So that's what it is, and that's what it does. Now, who invented it? There was a few people involved with its original being invented, but Vitalik Buterin is the biggest and most famous one. He's apparently Canadian. He's a very brilliant dude, obviously incredibly smart, but the original founding team was a lot more people. So let me see who founded Ethereum. It wasn't just Vitalik, but Vitalik is the one who's still there. So it was founded in 2013 by a group of developers led by Vitalik Buterin. There's Gavin Wood, Joseph Lubin, Charles Hoskinson, and Anthony Delorio. I don't know how to pronounce that. And Amir Chetrit, other co-founders who helped launch the project. So a lot of people were involved in the early days, and many of these people have gone off and started their own projects, largely a lot of them to compete with Ethereum. And Vitalik is the leader now. He is what's his actual role called? He is co-founder of Ethereum. That's what he still goes by. He's the face. He's what everyone talks about. He's the one who pushes the mission forward. There's obviously a ton of people involved in this, but the public face is this. The other benefit of a lot of these networks, if that's possible, is the fact that even the decisions can be more decentralized. So meaning you can actually have contributions to what happens within the ecosystem by voting on things. And that's present in some layer one blockchains. It's a bigger thing for some and less for other in terms of governance and what gets done with the resources that are there to hopefully push the system forward. And Ethereum was previously not well regarded in terms of how they handle all of that. in terms of supporting builders, but they've recently made some changes to, I believe it was the Ethereum Foundation or the Ethereum Federation. I can't remember the exact specific terms, look this up on your own, but they have become a lot more supportive of people building things on Ethereum, building the network, supporting the network by creating use cases, creating decentralized applications, creating all these different things. And now they're finally supporting them, which is massive news for the whole ecosystem, because the more valuable things that are built on it, the more Ethereum benefits. Let's use the same example of your phone. Your phone, like a smartphone, wasn't really valuable until there were applications to take advantage of what the technology could do, right? We probably could have had smartphones earlier, but until the software and the experience lines up for the consumer, it doesn't make sense, because there's not ways for people to benefit from it in terms of capitalism. Like, they can't monetize it, so where are the incentives aligned to progress this technology? That it wasn't there, right? Whereas this, there is ways for people to build things, and the more that they're financially incentivized to make Ethereum work, the chance of Ethereum failing just goes down dramatically. And the more talented people you have, the more likely it is that Ethereum's going to win, right? So let's see how many dApps are on Ethereum. This will give you a better idea of how many people are legitimately using this every single day. And also, if you are a software engineer, or if you're struggling to find a job, getting jobs in this space of Web3, whether it be development or any sort of jobs associated with this, is going to be one of the only few sectors hiring in the coming years. So if you're struggling to find a job, learning this and figuring out where would you fit, how could I come in and be valuable to this space, is going to benefit you tremendously. It can solve your employment problems, can actually give you a huge advantage. So let's look at these numbers. So estimated numbers for Ethereum dApps. As of mid-2023, one source estimated that Ethereum powers over 4,000 decentralized application. Another tracker mentions over 8,500. So there's varying numbers from different sources, but there's thousands of people, which means even tens of thousands of people whose livelihood depends on these kinds of things working in the Ethereum ecosystem, working and growing and getting better. And that's split across decentralized finance, which is what DeFi is, gaming, NFTs, wallets, social platforms, etc. It's creating the whole ecosystem, making the whole thing valuable as more and more people are using it. So it's a growing space, and a lot of people are going to have to understand how this stuff works. So if you want a job over the next few years or decade, I would definitely jump into this stuff now, because if you were an early mover on, say, software engineering before the dot-com bubble or boom happened, you became otherworldly rich, because when people are FOMOing in, fear of missing out, into a space, money gets thrown around because they're so scared of losing, and there's just not a lot of talent out there. So naturally, supply and demand allows you to charge way more. So I would start focusing on this as soon as humanly possible, either investing in it, or if you are looking to get a job or even change jobs, becoming an expert in this and figuring out enough of where you would fit best. So that's how many people are incentivized. Like, this is actually a lot of people, and it's growing every single day as it gets more legitimized, and as there are rules in place that allow people to do this safely. So a lot of people don't know this, but a lot of, like, especially America, but a lot of countries made it very difficult for crypto founders to build things. They would get penalized for doing so. They would purposely make it a lot more difficult. They were getting investigated for bullshit reasons, and they were getting shut down and potentially debanked, making it impossible to really grow. So this whole ecosystem would even have been way larger, bigger, and more sophisticated and advanced had people not purposely suppressed it. So the rate of growth is going to happen really quickly, but way too few people are here with the skills to take it where it could go. So if you're early in terms of investing in it, or if you're early in terms of building in it, you're going to win, especially if you're good. And the awesome thing is the fact that this is going to grow so rapidly that it'll actually take a lot of the best talent from other sectors a long time to realize this is happening, giving you a huge advantage if you move now, because they're already comfortable. They're already winning in the older system and how things were done before, that they're not going to go and acquire a new set of skills because it doesn't really make sense to them until enough people are telling them that's what to do. So very big deal. That's why it blew up, and that's where it's going. So where is it now? We obviously looked at the price, and some more reasons as to why this is happening is because obviously we talked about this before. It's the second biggest the second biggest cryptocurrency behind only Bitcoin. It's a name people know, and a lot of people are using it. But the biggest reason is the cycle. Of course, this is just naturally how these things go if you go back in time. But also the changes that have been made from the optics of crypto. So if you've noticed, if you've been paying attention at all, the states and Trump has been signing in a ton of different orders to provide clarity. And I believe one of the acts is a Genius Act, the Clarity Act. I can't remember the specifics, but they're basically creating the rules and the foundation for everyone to play this game. And so now people will want to, because as soon as they become educated, even slightly, it's better. It's just better technology. It's doing what is currently happening, but faster, cheaper, and more decentralized. So it's just an obvious yes, but there weren't rules in place before for people to feel comfortable to do it. And rich people don't really take risk. They pretty well only take on guaranteed wins for the most part because they're so rich, they have a lot to lose. It doesn't really make sense. So the rules have now gotten to the place where everyone is now getting involved. And once these things are clearly communicated and fully executed, then your financial advisor will be coming to you saying it's a really good time to buy crypto, even though he was the same guy telling you before it's unsafe, don't buy it. Because was he lying technically before? I would argue yes, but in his mind, he would say, well, the legislation wasn't there. If you really paid attention, the legislation was obviously going to come. They really didn't have a choice in the matter because if someone did it and they didn't do it, they'd be at a massive disadvantage and the states really can't afford to lose. So it would have been fairly obvious, but obviously they sign things saying that they won't tell you to do risky shit or they can only say certain things. So I get that. I don't think that your financial advisor is a bad person for not suggesting crypto, but I think if they didn't nudge you in the direction of becoming educated, then I would be a little wary on them. Obviously, they can't tell you to do anything. They can't tell you to buy anything, or they couldn't before. But if they didn't tell you that this stuff was coming, I would definitely get used to becoming more self-educated or find a different stream of education. But this is now going to be a very major thing. As soon as this is communicated in the next few months, it's going to be everywhere. They're going to be on every financial news channel. And then also, even bigger, the names associated with this are going to be making so much money that we've learned as human beings in a capitalistic economy, money does equal fame, right? And this is really the first time where that happened that directly. Usually before, back in the day, if you were a normal person, you needed fame and then you got money. Now, if you get money, you get fame because there's social media in these vehicles and everyone wants money, so they look up to the people who have it. Look at the last wave of entrepreneurs that somehow randomly became celebrities, like Zuckerberg, Mark, what the fuck's his name? Mark, I want to say Wahlberg. It's not Wahlberg. Mark Cuban. He became famous from getting rich. Elon, all these people became celebrities. And that's about to happen with all these crypto people. So these people have been ostracized. They've been deemed nerds. They've been deemed on the fringe. And they're about to become mainstream because they're going to be the golden boys of the people who were already winning before. So people who were seen as weirdos are about to become really cool or popular or well-known. And that's going to happen in a very big way because now they have the stories to tell. So that also means that people who were really good at telling stories before are now going to come in and tell stories in this world because stories move markets. And so Tom Lee is someone that you need to know if you are investing into Ethereum. Look, I look up his name and then it's all Ethereum. Okay, so who is Tom Lee? Tom Lee is this dude right here. He's a very smart, very well-spoken dude who's also from, to my understanding, a traditional finance background. So he understands how finance people think and operate and the stories that they listen to. He's also been right a lot of times, so he's a pretty trusted source. And so if you also know Bitcoin at all, you have definitely heard of Michael Saylor, okay? And so he became absolutely famous for taking his company strategy to crazy levels from doing what a lot of people call the infinite money glitch. And I definitely would look a lot more into that. But I'm going to butcher how I would describe this. So let's ask ChatGPT. How does Michael Saylor make money with strategy? This is all going to connect. It's going to be connected. So stick with me here. So how does Michael Saylor make money with strategy? His core strategy, Bitcoin is a treasury reserve company. So that's the point that I was trying to make here is that reserve companies are becoming a very big deal because of the work that Saylor did. And now Tom Lee is doing that work for Ethereum, which is a very big deal because of who he is, how good he is at telling stories, and how good the Ethereum story is to tell. So let me dive deeper into this and see how it does. So Saylor's core strategy, Bitcoin as a treasury reserve. So starting in 2020, Saylor led MicroStrategy to shift its corporate treasury, basically the company's cash savings, into Bitcoin instead of keeping it in the US dollars. And that was a very unorthodox decision, but he saw what a lot of people didn't, was the fact that holding money in cash is such a bad idea in late stage capitalism like this because the money printing is endless and then the premium that gets paid onto assets is crazy because anybody with money is also aware that dollars are worthless. And so as soon as they get money, they put it into assets. And so that just creates even a higher barrier point to entry and also a near guarantee that the price of assets are going to keep going up. And he saw that. And so the fact that Bitcoin is a fixed what's the word I'm looking for? Fixed supply asset, meaning there's only so many of them, right? The word was right here. I should have just looked. So Bitcoin has a fixed supply of 21 million coins max, which he sees as digital gold. There's only so many of these. So as long as more people want it, it's going to go up in price. And so as more and more people get involved, more institutions, more governments, all these different things, the FOMO is real. And the money that's going to enter this space when there's the rules in place, it's going to be crazy. And so if you think about traditional finance worlds, only a tiny amount of people's portfolios needs to come into crypto for it to completely change the game like we've never seen before. And that's also why Ethereum is going to go so mental, is because this is the first bull run or cycle where institutional money's actually here. Institutional money rules the whole financial system, and now they're coming here, and fractions of their money, tiny fractions of it, allocated to this, can do crazy things for the price of things, which you will see in the coming months. So MicroStrategy now owns over 200,000 Bitcoin, worth tens of billions depending on price. This makes them the largest corporate holder of BTC. So how he amplifies the bet. So this is the whole system and strategy. So Saylor doesn't just buy Bitcoin with cash, he uses financial leverage. That's how confident he is in this bet. So first of all, he does corporate flat cash flow. MicroStrategy generates money from its software business, which Saylor funnels into buying more BTC. That's becoming an increasingly small part of their business. They're basically becoming a Bitcoin bank, more or less. Obviously, I'm butchering the specifics of that. And anybody who's more educated in terms of the financial structure of these companies, please help everyone by educating us in the comments. So 2, debt, loans, and bonds. He issues corporate debt. So he borrows money at low interest rates to buy more Bitcoin because he knows that he's very confident that the percentages on a loan are not going to be even close to the gains experienced from holding the Bitcoin. So example, convertible bonds where investors give MicroStrategy cash in exchange for future repayment, and the cash is used to buy BTC. So if you lend someone money with a guaranteed return, it's going to be lower because it's guaranteed. There's less risk involved with that. And so he has so much conviction in his bet that he will go and get a bunch of money and provide a guaranteed return, understanding that he's going to make a lot of money by holding the BTC, because also the more he buys, the higher the value of the asset goes because he's holding more of it and there's less to go around. So equity, and this is the third one, is what a lot of people call the infinite money glitch. So obviously you can borrow money, you can also issue stock. So he sells new shares of MicroStrategy stock. And so since MicroStrategy is basically a reflection of Bitcoin, as Bitcoin goes up in price, so too does the value of MicroStrategy. This is really bringing into question how we value companies in the first place, and that's also why this is going to be talked about so much, and why crypto is going to be talked about so much, is it's changing the very fabric of how we view companies. Very big deal. So raising money from investors and using it to buy even more Bitcoin. Essentially, he's leveraging a publicly traded company as a Bitcoin ETF before the ETFs existed within Bitcoin. I'm sure you're aware of this if you're not already. There's massive Bitcoin ETFs and Ethereum ETFs, which has led to a lot of people buying Ethereum or Bitcoin because there was a easy way for them to access this market without figuring out how all this other stuff works, like self-custody, wallets, all that crap. They could just buy it from where they buy their other assets. So that's going to only happen with more and more crypto assets, and the Bitcoin ETFs and the Bitcoin treasury companies are a big deal, and soon ETH ones will only become even bigger, and the ETH treasury company and Tom Lee is what I'm going to talk about. So let's just finish this, and then I'll get into Tom Lee, and we'll wrap this up. So how he makes money. If Bitcoin price rises, the value of MicroStrategy's holdings rise. The company's stock price skyrockets. Investors who want Bitcoin exposure but can't hold it directly, pension funds, certain institutions, etc., they buy MicroStrategy shares. But that's also something to consider, is that those limitations are changing. If you didn't see that Trump allows, or now has passed something where 401k investments can now hold crypto assets, or soon will be able to, which is a massive deal, which may impact strategy. So we'll see how everything goes. This demand pushes MicroStrategy stock, creating wealth for Saylor and shareholders. Why it works for him. Saylor treats Bitcoin like prime real estate in cyberspace. He compares it to buying land in Manhattan before it was fully developed. Scarce and extremely valuable long term. It's one of the only few assets that is legitimately fixed supply, which is a very big deal. He's willing to endure volatility, Bitcoin crashing short term, because he's betting on long-term adoption and scarcity. He's zooming out, he's playing the long game, and so far it's worked for him, and it probably will continue to work for him. So in summary, Michael Saylor makes money by turning MicroStrategy into a Bitcoin leveraged vehicle. He uses company profits, debt, and stock sales to buy more BTC, Bitcoin, betting that Bitcoin's long-term type price appreciation will outweigh inflation and volatility. And again, so far he's been right, and chances are that's probably a pretty accurate guess, especially when you have the kind of money that he now has to also become basically a self-fulfilling prophecy where he's actually pushing up the price of the own asset that he's banking his business on. It's a big deal. And so Tom Lee, this guy right here, is coming in and trying to be the face, the storyteller, the brand champion for a company like Michael Saylor's doing this for Ethereum. And so Tom Lee's company, let me see what it's called again. Tom Lee. And Tom Lee, if you ever find this, come on my podcast, The Ben Levitt Show. We talk a lot about crypto and stuff like that. So, or if anyone knows Tom and can connect me with him, please send me an email or a comment on this. Let's get connected, and I want to interview Tom a lot and explain what he's doing. So his treasury company is Bitmine right here. So Bitmine is doing what Saylor did with Bitcoin for Ethereum. And so to do this, the story that Saylor was telling was easy to tell. And you have to have a clear story to build a movement. And so his story was always around the fact that there's scarcity, right? And how it's a perfect hedge against the other financial issues that exist out there because almost nothing else is truly scarce. And so in an asset-driven economy, the only scarce asset, in theory, once it reaches adoption, which it has, is going to go up theoretically endlessly, is what Saylor is basically saying. It's an easy story to tell, and if you're even slightly educated, the concept can make sense to a lot of people. But the story is easy enough to tell. It makes sense, and it's also very culturally relevant because a lot of people have animosity to the existing systems. This is kind of like the counterculture approach. So that it also had that going for it as well. Tom Lee's doing the same sort of thing for Ethereum. And so Ethereum is a big deal because, and I think he pushed a lot of this story, but why it's such a big deal is because the US government is very supportive of stable coins. So stable coins are just basically a online version, a blockchain version of a US dollar that matches the price of the general currency. Why the US government loves stablecoins is because they need people to buy their bonds. They need people who want to have the US dollar. And not many people in the global market are doing that like they used to. So to issue a stablecoin, you have to have each stablecoin backed one-to-one with a treasury, so with a US dollar. So you have to actually basically have that, meaning a lot of demand is created for the US dollar, which also helps the US do a lot of the things they need to do to solve their debt problems. So naturally, the US economy, they're like, yes, we love stablecoins. And Ethereum is one of the primary tools that allows these big institutions like banks to issue their stablecoins. And so people have been pushing the story, and Tom Lee's been doing this a lot as well, of creating the perceived safety with Ethereum, because that's his biggest hurdle, right? Is everyone has an opinion on cryptocurrency. And so a storyteller has to figure out, how do I change the minds and opinions and beliefs of who is most important? And so if he knows his biggest obstacle is that people think that crypto is a scam, he needs to clearly articulate to the people that can change that narrative why it's not. And so since he can go tell the story that I just told to all these banks, and then he says that ETH or Ethereum is the best blockchain for stablecoins, that means that a lot of the people that control the mind share of financial services, if he can convince them that Ethereum is the best place to do this, and they all come in and do that, it then in turn just becomes that thing because everyone's there. The network effect kicks in. And then also because every one of these massive institutions is banking on the success of Ethereum, then again, the whole network benefits, and then he benefits because he's running an ETH treasury company. So that's a massive thing. He's got a story, he's got something to tell. And much like Saylor, he's executing almost the exact same strategy. But the other advantage that Ethereum has that Bitcoin doesn't currently is the fact that you can earn money from staking your Ethereum. So for holding your Ethereum and providing, I'm going to butcher the specific technology. So let me just get ETH, or how does ETH staking work? I'm going to butcher this. So let's get ChatGPT to help me with the specific terminology. So Ethereum staking in a beginner-friendly way. Staking is how Ethereum secures its network now that it uses proof of stake instead of proof of work. So in proof of work, like Bitcoin, miners use computers to solve problems. In proof of stake, people lock up stake, some of their ETH, to help run the network. In return, they earn rewards. So basically, you're helping the network function by holding your ETH and staking it. It's allowing the whole thing to function, be more decentralized, all the good things that can come with Ethereum, and then you earn rewards for doing so. So much like when people need to burn gas to do different things, you earn rewards for allowing the whole system to take place for that gas to be burnt. So that's really why this is a very different thing than, say, Bitcoin, is because he can also add on that story, which is a very big deal, and also helps him tell the whole benefit of why you should hold Ethereum. It's once he gets the corporate or the big money to buy into this, which he's done through selling the narrative of this is the stablecoin blockchain, then the story becomes even easier to tell when he can say you get the benefits of, say, a tech stock, but you get a lot of the recurring revenue that is not possible in a tech stock. Like there's so many benefits to what he's trying to say in terms of what rich people will care about. They're going to buy into this story, and he's someone who they'll listen to because he speaks their language, and that's a very big deal. You're going to start seeing this guy everywhere. He's going to become very, very famous. Also because I'd say he's probably a little less brash than Saylor. So Saylor is great for getting eyeballs, but people are a little more opinionated on him, where I feel like he can come in and a lot of people will have less of an aggressive opinion on him, allowing him to be more liked by more people, which is my opinion. I don't know if that's better or worse in terms of just general adoption, but a lot of people will listen to him, and he's going to be right on a lot of things, not necessarily because he's a genius, just because he's saying what a lot of people already knew, but he can say it in a way that the people who will move it can understand and actually get them motivated to move. So that's then essentially is Tom Lee. It's what he's trying to do, and it's why stablecoins were such a big connection to Ethereum and what Ethereum really is going on. So how can you invest into Ethereum? If you've watched this and you decide you want to invest in Ethereum, I still don't recommend investing yet. I recommend going and doing more research to make this decision for you. There's a lot to be said for if you know something's a good decision based on your own research. I've just found throughout my life it's more likely to work. So you can just go onto any exchange and buy Ethereum. That's the easiest way to invest. You can also invest into things that have been built on Ethereum. So the dApps that we talked about, the NFTs are examples of that. I hold NFTs in the Ethereum blockchain. It's different ways to bet on the fact that the Ethereum ecosystem will continue to grow. There's a ton of companies that exist on Ethereum. Let me find one or two, like Uniswap. So Uniswap is a decentralized exchange for Ethereum where you can swap different tokens on the chain without having to go to a centralized exchange, say like crypto.com, Binance, etc. So that's got a lot of utility for the use of Ethereum, and there's so many other things that are there. So if you think Ethereum's going to work, betting on Ethereum will still get you disproportionate returns compared to other assets because we're at an early point in the adoption curve where it ramps up like crazy, and so if you're just there, you make a ton of money. But if you have a higher risk appetite, if you think this is going to work, there are so many opportunities within crypto to make more leveraged bets. So betting on the things that will likely benefit even more from the general ecosystem rising. So a rising tide lifts all ships, but not proportionately, right? Some things on a percentage basis can go up so much more because less money needs to come in and move them, right? And so the more that this system grows and the more adoption that it actually has, the more valuable everything within it becomes. So I always use the example, because a lot of people know that it exists, of, say, Pudgy Penguins, right? So Pudgy Penguins is an Ethereum NFT project that is right here. It's selling for 10.53 Ethereum right now, 10.53 ETH to USD. And in my opinion, that is underpriced. And that's going to come in at 48,000 USD. And I personally think that is underpriced. Not financial advice, but I would venture to guess that will move pretty dramatically over the coming 6 months. And so this is another way that you could come into this ecosystem and make a more leveraged bet. Because if you hold this asset, it's pegged in Ethereum. So let's say the price stayed the exact same, you still would be making more money because you have the opportunity for riding up this total bank backed to Ethereum. So if Ethereum goes up in price, so too with this. But you also have the opportunity for, as more and more people make money from the ecosystem, they're going to have ETH, and they're also going to have way more money in general. And so then they start doing more things with it. They come into the ecosystem and think, what's cool? What can I do? What's a good experience? And so if you can figure out where those things will be beforehand, that's where you make crazy life-changing money. A lot more difficult to do. You have to be a lot more creative. But if you're looking at people who have become generationally wealthy from crypto, who weren't already really rich, this is what they've done. They've put in the time and research to find where the more higher leverage bets are to get the kind of returns that are just otherworldly crazy, that 100x plus on people's money. And that's really the only way that you can turn a small amount of money into a ton of money, is to take very leveraged bets and do enough of them where one or two of them hits. I saw, as someone who came from like a middle-class family, the only way I would ever get out of being middle class was something like this, finding the highest leverage financial vehicle. And that is, in my opinion, crypto and the things that are going to be built onto it within Web3. So become educated, use ChatGPT like crazy, think about the things that I've said, go farther in terms of your research, and then also always do your own research. Anybody who's on this platform who's telling you to buy something or even making price predictions, you probably shouldn't listen to them. They're almost always going to be wrong, and they're going to be right enough times, especially during a bull market, that you're going to start to believe what they say. And any idiot can make money during a bull market. So learning the ability to do your own research is like the whole saying of, if you give a man a fish, he eats for a day. If you teach a man to fish, he fishes for a lifetime. And the types of fish that you can catch in this space, if you do your research, is just otherworldly, life-changing, and can really remove yourself from the unfortunate reality of late-stage capitalism that most people face. So this is Ethereum 101. Feel free to rewatch any of this section. If you have any questions for me that I can answer, I will try to answer in the description box down below. And if I can't answer anything, hopefully somebody in the community will come in and help you, because the more that we all learn, the more that this gets adopted, the more money we're all going to make. So none of this is financial advice. Invest at your own risk. Anything that you buy could go to absolute zero. Make your own decisions, become educated, and I'll see you next time, next video. As always, don't buy this. I'll see you next time. Peace.